Good morning, and welcome to Man of the People Tax Topics. My name is Bob Hannan, and I'm a certified public accountant. We also have our brand ambassador, Miss Siobhan Collins, who will be helping us with some of the questions from our virtual audience. Now, the purpose of the series is to help you maximize your refund. Okay, I want to get you to understand these tax topics just to a degree. You don't have to be an expert like myself, but you have to find out, you have to know these things in order to plan and harness the tax code effectively. Yeah. It takes planning and awareness of the rules. Okay, you have to know these things in order to prosper, Let's start this video series with the Earned Income Credit. It's a powerful way for moderate to low income folks and working people to get a lot back in their return. The key word here is working people. Go ahead there. Go ahead. Now, who can qualify to take this credit? You or your spouse, if you're filing a joint return, must have a Social Security card, and it has to be valid for employment. Okay? It has to be valid for employment. In other words, it can't begin with the number 9. Go ahead, bounce us forward there. Oh, here's a question now from our brand ambassador, Siobhan Collins. Go ahead, Siobhan.
Bob, thanks for getting us so much money back on our taxes every year.
Who's this from? Who is this from? Is this from a person in the audience?
Yes, her name is Kisa.
Kisa, all right.
And her question
I know
is...
Kisa's a client of ours, great.
My new husband is from Guatemala, and his Social Security card is not valid for employment. Does that mean he cannot get an earned income credit even though my Social Security card is valid?
Oh boy, we got problems here. What's her name? Kisa. Kisa, I gotta tell you, we have big trouble here. Kisa, you have two choices. One is to file separately, or jointly. Now, if you file separately, I'm afraid no credits available. No good here. If you file jointly and he doesn't have a good Social Security number, you can't get it there either. Now what can you do? There's nothing left. If you're to break up and he wasn't to live with you the last 6 months, well then maybe you'd be eligible. But he really does have to, you really do have to break up, that kind of thing. I don't want to do that to your marriage. You just got married this year, heaven's sake. Looks like you're not eligible for the Earned Income Credit there any longer, Kisa. Good luck to you in the future.
Thanks again, Bob.
You're welcome. All right. Now, in order to maximize your return, step 1, have babies. Step 1, have babies. You really can't get much from the return or from the Earned Income Credit if you're single without any kids there. Okay? And step 2, be careful with that marital status. As soon as you get married, it brings up a whole new dynamic that we just saw with Kisa and some other folks. Cuts down some of your options. And I hate to say this, but sometimes getting married can really wreak havoc with your tax refunds. Sometimes it doesn't work out at all. So step 1, have babies. Go ahead and let's see that next picture there. Here we have a picture of a tiger and a little tigger. Okay, all right, a tiger and a little tigger. That's what we're talking about. Have babies. Go ahead. All right. Now, how much do we get from the Earned Income Credit? Now, watch this. With one child, we get as much as, check this out, $3,000. How much for 2 children? $5,000. And again, with three children, $6,000. Okay, it's pretty generous. That's your maximum refund. I estimated these out a little bit here, but that's about what you would get, okay, for an earned income credit, as long as you're getting the maximum amount. Now you say, hey, how do I know I'm eligible for the maximum amount? Go ahead. Here's a single person. All right, single person, following head of household. One child. Notice, they'll get the maximum benefit when they earn between about $9,500 and I believe that's about $22,000 right there. Notice it kind of plateaus right in between $9,500 and about $22,000. As you make more than $20,000, notice how it phases out. It phases out to zero at some point. And if you only make, say, $5,000, you'll get much less. It's still worth it. Of course, you still claim it. But this is a powerful incentive for people to go out, people who are low income, just starting out, to go ahead out and work and make some extra money. Okay, go ahead, next one. This graph gets a little too busy. Here we have again, here's the person with one. Let me get these off here. Boom, let me get these off. Here's a person that has one child. Once again, 2 and 3 kids. As I said before, about $5,000 and $6,000 respectively. Now notice also, if you don't have any children at all, you can still get a little bit of credit. You can get up to, say, about $500 or $600 if you're working and you're making between $6,400 and about $7,800. Same kind of concept. The more you work, you get the full amount, and then it diminishes after you make over a certain amount. And these values, we go through here and analyze this a little bit. You can see how the people who have 2 and 3 kids, when you put these sums together, they're really going to award you quite a bit once you hit about $13,000. Of course, this is a 2012 chart. Numbers haven't changed that much in the last couple of years. Go ahead and advance this again there, young. Here's the key question. What is earned income? W-2 income, working for somebody else. 1099 income, where you're not an employee, you're an independent contractor, or just running a business by yourself. Now I have clients who come in and they say, oh, well, I babysat and I made exactly the right amount of money. Well, I say, hold the phone now. You have to have really good records. You have to operate as a business in order to exploit this credit. They'll turn it down if you simply say, I don't have any records, but it really happened. Well, that's not good enough. And there's certain things you can do, certain steps you can take to make sure you have the right documentation, and look to the 3rd video in our series to help you with that and make sure you have everything in a line. Now, W-2 income works out to be the best, okay? Because in that case, the self-employed